Hey my fellow investors, welcome back to another video of investing. So I was talking to a fellow investor who is pretty new to the stock market, and he wants to invest in what we call REITs. And he asked me if investing in a realty income was a good idea. Now, for those of you who don't know what a realty income is, now this is a big name in the real estate investment trust industry. It has earned that level of recognition. Indeed, there are a lot of things to like about this company, but there's also something investors need to think about before jumping on board. After all, no stock is perfect. However, in this video, I'm going to go through reasons why I own this company and why I think it's a perfect fit for any investors who is into dividend investing. Also for that person who can't afford to invest in real estate, like in physical properties. Because let's be honest, investing in real estate is pretty expensive. So this video is going to be for you as well. So however, before we get going, do not forget to subscribe to the channel because this will mean a lot to me and also growing this channel as well. Also consider sharing and leaving a comment below. Some of you may disagree with what I'm saying in this video, and leaving a comment is going to help me to improve. Anyway, with that said, let's jump into the video. So the first reason why you should like this stock has to do with its incredible record. Now, you can't invest in this stock without looking at its dividend history. Now, first, the REIT pays monthly. So owning this kind of stock is like replacing a paycheck. However, the really big story is that the dividend has been increased annually for 28 consecutive years. That's right. I repeat that. It has been increased for 28 consecutive years. Now, that puts realty income into the elite dividend achievers category, right? Now, you don't just increase a dividend like that by accident. It takes a consistent and proven approach. Now, its dividend is basically proof that management knows what they're doing. The second reason why you should invest in this stock is the size of its portfolio. Right? Now, over the last 28 years, Realty Income has become a giant company with a portfolio of more than 6,500 properties across the world. Now, just let that sink in. That's close to 10,000. Right? Although roughly 85% of its portfolio is tied in retail assets, no single tenant accounts for more than 6% of its rent roll. And even leases like Walgreens occupies multiple properties. So the risk from any one location is diminished when it comes to this stock. Now, the rest of the portfolio is largely spread between industrial and office properties, providing a little bit of diversification to the mix which we all need at the end of the day. However, roughly 4.5 of the top line is generated from properties in the United Kingdom. Now, that's small, relatively speaking, but it could open up a whole new continent of opportunity for realty income. Now, given its size, branching out to Europe will help ensure it can continue to expand for years to come. The other reason, which is our third reason, is that this stock has survived the storm. Now, while realty income is a business, is clearly time tested, given the 28 years of annual dividend increases, it's worth noting that it hiked its dividend every quarter in 2020. Think of that for a moment. 2020, that's when we had the pandemic. And now this stock is here, increasing its dividend in every quarter. Now, you see, in the face of a global pandemic, realty income's business barely skipped a beat. You see, even when other companies were struggling, this company kept up with paying its dividend, just like promised. Now, in fairness, rental collection fell into the low 80% range early in the pandemic when governments were shutting down the economies to slow down the spread of this virus. But realty income's collection rate quickly recovered to annual 94% or so by the end of the year. Now, the fact is that realty income took the hit and kept rewarding its investors, which I think is reassuring, especially for that person who's about to retire or who's thinking of investing in this stock for retirement, that you can trust their management. Reason number 4, which is going to be my last reason why I would invest in this company, is its low cost of capital. Now, one of the big pluses of a Realty income is that it has a low cost of capital, and that's vital in the net lease space. Effectively, Realty income provides capital to companies by buying their property and instantly leasing it back to them. Now, generally under long-term leases. Now, it takes the spread between its cost of capital and the rent it collects. Now, Realty income is investment grade balance sheet, ensures good interest rates in the bond market, and relatively lofty stock price means cheap equity capital. Now, investors know how well run Realty income is at this point, and it generally trades at a premium price compared to peers. So while its 4.6% dividend yield is generous compared to the SP 500 index, you can find others in the net lease which are more generous in paying dividends. Now, with that said, Realty income's yield is around the mid of the range over its recent history. So it isn't cheap, but it isn't as expensive as it has been in the past. So when it comes to this stock, value investors, I think, will probably want to keep this rate on a watch list. But investors willing to pay a fair price for a great company should still be attracted. So when you step back and look at Realty income, the positives, we can all agree, outweigh the negatives. In fact, the one big negative, valuation, is kind of a positive too, right? Given that a low cost of capital helps the REIT grow its business. All I'm saying is that conservative investors looking to add a reliable dividend payer to their portfolio, Realty income is worth a close look. So anyway, that was it when it comes to Realty income, and I hope you liked the content in this video today. And if you did, don't forget to smash the like button and consider subscribing to the channel, and let's join the journey. See you in my next video.